Question 1. Scenario based. Mr. Thompson owns a home in Alaska that he rents out part-time through M. He has a standard homeowner's insurance policy. Recently, a guest slipped on an icy walkway and was injured. The guest is now suing Mr. Thompson for medical expenses. Which of the following coverages is most relevant for Mr. Thompson to have in this situation? A. Personal liability coverage under his homeowner's policy. B. Flood insurance under the National Flood Insurance Program and FIP. C. Earthquake endorsement. D. Home sharing endorsement. Answer: D. Home sharing endorsement. Explanation: a standard homeowner's policy typically excludes coverage for liability arising from short-term rentals like EB. Mr. Thompson would need a home sharing endorsement to extend coverage to this scenario. Without it, he may not be covered for claims related to injuries suffered by paying guests. While personal liability coverage, option A, might seem relevant, most homeowners' policies exclude business activities, and renting out your home falls under this exclusion without proper endorsement. Flood insurance and earthquake endorsements are specific to natural disasters and do not cover liability for guest injuries. Question 2. Which of the following is an excluded peril under a standard Alaska homeowners insurance policy? A. Fire. B. Windstorm. C. Earthquake. D. Vandalism. Answer: C. Earthquake. Explanation: under a standard homeowners policy in Alaska and elsewhere, earthquake is a specifically excluded peril. To cover earthquake damage, a separate earthquake endorsement must be purchased. Fire option A, windstorm option B, and vandalism option D are typically covered perils under standard homeowners policies, though each policy may have its own terms and conditions. Earthquakes pose a significant risk in Alaska, so this exclusion is critical for homeowners to address with additional coverage. Question 3. In Alaska, if a homeowner wishes to insure their property at the amount needed to replace their home without considering depreciation, which valuation method should they select? A. Actual cash value, SEV. B. Functional replacement cost. C. Replacement cost value, RCV. D. Agreed value. Answer: C. Replacement cost value, RCV. Explanation: replacement cost value, RCV, ensures that the homeowner is reimbursed for the cost to replace the damaged property without deduction for depreciation. Actual cash value, CV, on the other hand, accounts for depreciation and would not provide full reimbursement for the cost of new materials. Functional replacement cost allows for replacement using less costly materials, and agreed value is used in situations where the insurer and policyholder agree on the value of a specific item, usually high value, or unique property. Therefore, RCV is the correct method for replacing a home without depreciation. Question 4. Which of the following is considered an unfair claims practice under Alaska's insurance regulations? A. Denying a claim for a peril explicitly excluded in the policy. B. Failing to acknowledge and act promptly upon communications regarding a claim. C. Requiring documentation for a large claim before payment. D. Offering a settlement amount that is less than the policy limits. Answer: B. Failing to acknowledge and act promptly upon communications regarding a claim. Explanation: under Alaska insurance regulations, insurers are required to handle claims in a timely and fair manner. Failing to acknowledge and act promptly upon communications from the insured regarding a claim is considered an unfair claims practice. This regulation ensures that policyholders receive efficient service when filing claims. Denying a claim for excluded perils, option A, and requiring documentation for large claims, option C, are acceptable practices as long as they are in line with policy terms. Offering a low settlement, option D, is not automatically unfair unless it violates policy provisions or good faith obligations. Question 5. Under an Alaska HO3 policy, which of the following perils would NOT be covered for damage to the insured's dwelling? A. Fire. B. Flood. C. Theft. D. Windstorm. Answer: B. Flood. Explanation: a standard HO3 policy does not cover damage caused by floods. Homeowners must purchase separate flood insurance through the National Flood Insurance Program and FIP, or a private insurer to protect against flood-related losses. Fire option A, theft option C, and windstorm option D are typically covered perils under a standard homeowners policy, although specific exclusions may apply depending on the policy's details. In Alaska, flood coverage is particularly important due to risks related to snowmelt, heavy rains, and coastal storms. Question 6. A homeowner in Alaska has purchased a homeowner's insurance policy with a $250,000 limit for dwelling coverage. The home is damaged by a fire and the repair costs total $270,000. The homeowner has an extended replacement cost endorsement What amount will the insurance company pay for the repairs? A. $250,000. B. $270,000. C. $20,000. D. $255,000. Answer: B. $270,000. Explanation: the extended replacement cost endorsement provides additional coverage beyond the policy limit, typically allowing for an increase of €2.25% over the stated limit, depending on the policy terms. In this case, the homeowner's repair costs exceed the policy limit of $250,000, but the endorsement covers the extra $20,000 needed to fully repair the home, bringing the total payout to $270,000. Without the endorsement, the insurer would only pay up to the policy limit of $250,000. Question 7. Scenario-based MS. Rivera lives in a high-risk flood zone in Alaska. She does not currently have flood insurance, but is considering purchasing a policy. 2 weeks after applying for flood insurance through the NFIP, her home is severely damaged by a flood. Can MS Rivera file a claim for the damages? A. Yes, as long as the policy was purchased within 30 days of the loss. B. No, because there is a 30-day waiting period before coverage becomes effective. C. Yes, since she lives in a high-risk flood zone. D. No, because the damage occurred before the policy was issued. Answer: B. No, because there is a 30-day waiting period before coverage becomes effective. Explanation: the National Flood Insurance Program (NFIP) imposes a 30-day waiting period before a flood insurance policy becomes effective. Since MS Rivera's home was damaged by a flood within 2 weeks of applying for coverage, the policy would not yet be active and she cannot file a claim for the damage. This waiting period applies unless the policy was required as a condition for obtaining a mortgage, in which case there may be an exception. Neither her high-risk location nor the timing of her purchase affects this rule. Question 8. Under an Alaska homeowner's insurance policy, which of the following would typically be covered under coverage C? Personal property. A. The family's boat while stored at the marina. B. A detached garage on the homeowner's property. C. Jewelry stolen from the home up to the policy limit for personal property. D. Damages from an earthquake. Answer: C. Jewelry stolen from the home up to the policy limit for personal property. Explanation: coverage C in a homeowner's insurance policy covers personal property like furniture, electronics, and valuables, including jewelry, but only up to specified limits for certain types of property. Theft of jewelry would be covered under this section, though additional coverage or endorsements may be necessary for high-value items. Boats stored at a marina, option A, are generally excluded, and detached structures like garages are covered under coverage B. Option B. Earthquake damage, option D, is not covered without a specific endorsement. Question 9. Which of the following is TRUE about the use of credit scores in Alaska's home insurance underwriting process? A. Credit scores cannot be used at all in Alaska to determine premiums. B. Credit scores can be used to determine premiums but not to deny coverage. C. Credit scores can be the sole determining factor in denying coverage. D. Alaska law mandates a 50% surcharge for low credit scores. Answer: B. Credit scores can be used to determine premiums but not to deny coverage. Explanation: in Alaska, insurers are permitted to use credit scores as one factor in determining home insurance premiums. However, they cannot use credit scores as the sole reason to deny coverage per state regulations. Insurers must consider multiple factors and cannot unfairly penalize homeowners solely based on their credit. Additionally, there is no mandatory surcharge of 50% for low credit scores, nor are credit scores completely banned from consideration in premium determination. Question 10. In Alaska, which of the following statements about the fair access to insurance requirements FAIR plan is true? A. The FAIR plan is only available for commercial properties. B. The FAIR plan provides homeowners insurance for high-risk properties that cannot obtain insurance through the standard market. C. The FAIR plan offers coverage at significantly lower premiums than the standard market. D. The FAIR plan excludes coverage for fire damage. Answer: B. The FAIR plan provides homeowners insurance for high-risk properties that cannot obtain insurance through the standard market. Explanation: the FAIR plan is a state-mandated insurance pool designed to provide basic property insurance to homeowners and businesses who cannot find coverage in the standard market due to the high-risk nature of their properties. It does not offer low premiums and includes coverage for fire damage. It is available for both residential and commercial properties. Question 11. Which of the following is NOT considered part of the dwelling in an Alaska homeowner's insurance policy? A. Attached garage. B. Built-in appliances. C. Detached tool shed. D. Installed wall-to-wall carpeting. Answer: C. Detached tool shed. Explanation: under homeowners insurance policy, the dwelling includes the home structure itself and any attached structures like an attached garage and built-in appliances. A detached tool shed would fall under coverage B for other structures. Installed wall-to-wall carpeting is considered part of the dwelling. Question 12. What is the maximum liability limit under a typical Alaska homeowners insurance policy for medical payments to others? Coverage F. A. $500. B. $1,000. C. $5,000. D. $10,000. Answer: C. $5,000. Explanation: most Alaska homeowners insurance policies offer medical payments coverage, coverage F, with limits up to $5,000. This coverage pays for medical expenses incurred by guests injured on the insured's property, regardless of fault. Higher limits may be available with additional endorsements. Question 13. Which of the following types of damage is excluded under a typical Alaska homeowners insurance policy? A. Damage caused by a volcanic eruption. B. Damage caused by a burst pipe. C. Damage caused by termites. D. Damage caused by a windstorm. Answer: C. Damage caused by termites. Explanation: damage caused by termites and other pests is typically excluded from homeowners insurance policies as it is considered a maintenance issue. Volcanic eruptions, burst pipes, and windstorms are usually covered perils, although policyholders should check for specific exclusions or limitations. Question 14. Which of the following is true regarding flood insurance requirements for homes in high-risk flood zones in Alaska? A. Flood insurance is only required if the homeowner requests it. B. Flood insurance is mandatory for all homeowners in Alaska. C. Flood insurance is required by mortgage lenders for homes in high-risk flood zones. D. Flood insurance cannot be purchased through private insurers in Alaska. Answer: C. Flood insurance is required by mortgage lenders for homes in high-risk flood zones. Explanation: mortgage lenders require flood insurance for homes located in designated high-risk flood zones, special flood hazard areas in Alaska. Flood insurance can be purchased through the National Flood Insurance Program, NFIP, or private insurers. It is not mandatory for all homeowners, but may be necessary depending on the location of the property. Question 15. Under Alaska homeowners insurance regulations, how long does an insurance company have to acknowledge receipt of a claim? A. 7 days. B. 10 days. C. 15 days. D. 30 days. Answer: B. 10 days. Explanation: in Alaska, insurance companies must acknowledge receipt of a claim within 10 days. This prompt communication is part of the state's regulations to ensure fair claims handling practices. Question 16. A homeowner in Alaska has a comprehensive home insurance policy that includes a personal property replacement cost endorsement. If a 5-year-old television is stolen, how will the claim be handled? A. The insurer will pay the current depreciated value of the television. B. The insurer will replace the television with a new model of similar kind and quality. C. The insurer will deny the claim because the television is more than 3 years old. D. The insurer will only cover 50% of the cost of the new television. Answer: B. The insurer will replace the television with a new model of similar kind and quality. Explanation: a personal property replacement cost endorsement means the insurer will replace stolen or damaged items with new ones of similar kind and quality without accounting for depreciation. In this case, the insurer will provide a new television even though the stolen one was 5 years old. Question 17. If a windstorm causes a tree to fall on an Alaska homeowner's roof, which of the following is true about the coverage under a standard homeowner's policy? A. The insurer will cover the cost to remove the tree, but not repair the roof. B. The insurer will cover the repair of the roof and removal of the tree, subject to policy limits. C. The insurer will cover the repair of the roof, but not the tree removal. D. The insurer will not cover the roof repair or tree removal. Answer: B. The insurer will cover the repair of the roof and removal of the tree, subject to policy limits. Explanation: a standard homeowner's policy covers damage to the roof caused by a windstorm and also covers tree removal if the tree damages a covered structure, subject to certain limits. Policyholders should review their specific policy limits for tree removal costs. Question 18. Under Alaska law, which of the following is required for an insurance company to cancel a homeowner's policy after it has been in effect for more than 60 days? A. The insurer must provide 10 days notice before canceling for non-payment of premium. B. The insurer can cancel the policy at any time without notice. C. The insurer must provide 45 days notice before cancelling for any reason. D. The insurer can only cancel the policy if the home is vacant for more than 30 days. Answer A. The insurer must provide 10 days notice before cancelling for non-payment of premium. Explanation. Alaska law requires that an insurer provide at least 10 days notice before cancelling a homeowner's policy for non-payment of premium. For other reasons, such as material misrepresentation, insurers may be required to give 30 days notice. Question 19. Scenario-based. Mr. Johnson owns a home in Alaska and his property is damaged by a severe earthquake. He did not purchase an earthquake endorsement on his homeowner's policy. How will his insurance respond to the damage? A. The insurer will fully cover the damage under the dwelling coverage. B. The insurer will deny the claim, as earthquake damage is excluded. C. The insurer will offer a partial settlement based on the type of damage. D. The insurer will cover 50% of the damage costs. Answer. B. The insurer will deny the claim, as earthquake damage is excluded. Explanation. Standard homeowners insurance policies exclude earthquake damage. Homeowners in Alaska, where earthquakes are more common, must purchase a separate earthquake endorsement or a dedicated earthquake insurance policy to be covered for this peril. Without such coverage, Mr. Johnson's insurer will deny the claim. Question 20. In Alaska, which of the following must an insurance company provide if they decide to non-renew a homeowner's policy? A. A written explanation for the non-renewal. B. A refund of the premium. C. A list of alternative insurers. D. A discount on the next policy renewal. Answer A. A written explanation for the non-renewal. Explanation. If an insurer decides to non-renew a homeowner's policy in Alaska, they are required to provide a written explanation to the policyholder. The explanation must include the specific reason for the non-renewal, ensuring transparency and fairness in the process. Question 21. In Alaska, how long does an insurer have to pay a claim after they have agreed to a settlement? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Answer B. 30 days. Explanation. Once an insurer has agreed to a settlement, Alaska law requires that they pay the claim within 30 days. This regulation ensures that policyholders receive their settlement funds in a timely manner after an agreement is reached. Question 22. Which of the following is covered under a typical homeowner's insurance policy in Alaska? A. Damage from landslides. B. Damage caused by wild animals. C. Damage due to poor maintenance. D. Damage from burst water pipes. Answer. D. Damage from burst water pipes. Explanation. Homeowners insurance typically covers damage from burst water pipes as it is considered a sudden and accidental occurrence. However, landslides, damage from wild animals, and damage caused by poor maintenance are usually excluded from standard policies unless additional coverage is purchased. Question 23. Which of the following factors could result in a higher homeowner's insurance premium in Alaska? A. Living in a low-risk flood zone. B. Having multiple claims in the past 5 years. C. Having a home equipped with a sprinkler system. D. Having a higher credit score. Answer. B. Having multiple claims in the past 5 years. Explanation. Multiple claims in a short period of time typically result in higher homeowners insurance premiums, as they indicate a higher risk to the insurer. Other factors, such as living in a low-risk flood zone or having safety features like a sprinkler system, can help reduce premiums. Question 24. If an Alaska homeowner's property is deemed a total loss due to fire, which type of settlement will most likely be used if they have a replacement cost policy? A. Actual cash value. B. Replacement cost without deduction for depreciation. C. Market value. D. Adjusted value based on current home sales. Answer. B. Replacement cost without deduction for depreciation. Explanation. A replacement cost policy reimburses the homeowner for the cost of rebuilding the home with materials of like kind and quality without considering depreciation. This means the policyholder will receive enough to replace their home at current construction costs rather than the actual cash value, which factors in depreciation. Question 25. Which of the following scenarios would typically require an endorsement to a standard Alaska homeowner's insurance policy? A. A homeowner wanting coverage for high-value jewelry. B. A homeowner needing coverage for a detached garage. C. A homeowner seeking protection from windstorm damage. D. A homeowner desiring flood insurance coverage. Answer A. A homeowner wanting coverage for high-value jewelry. Explanation. Most standard homeowners insurance policies have limited coverage for high-value items like jewelry. To adequately cover such items, the homeowner would need an endorsement or a scheduled personal property rider. Other situations like covering a detached garage or windstorm damage are typically included in standard coverage, while flood insurance requires a separate policy. Question 26. In Alaska, which of the following types of damage is likely to be excluded from a standard homeowner's insurance policy? A. Fire damage. B. Windstorm damage. C. Earthquake damage. D. Vandalism damage. Answer. C. Earthquake damage. Explanation. Earthquake damage is typically excluded from standard homeowners insurance policies, not just in Alaska but nationwide. Homeowners in Alaska, where earthquakes are more common, must purchase a separate earthquake insurance policy or endorsement to be covered for this peril. Question 27. Under the Alaska homeowners insurance laws, how much notice must an insurer give before cancelling a policy due to non-payment of premiums? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer B. 10 days. Explanation. Alaska law requires that an insurer provide at least 10 days notice to the homeowner before cancelling a policy for non-payment of premiums. This gives the homeowner time to pay the overdue premium before the policy is cancelled. Question 20. Which of the following perils would most likely be covered under an Alaska homeowners insurance policy? A. Damage from a mudslide. B. Flood damage. C. Lightning strike damage. D. Termite damage. Answer C. Lightning strike damage. Explanation. A lightning strike is considered a covered peril under most standard homeowners insurance policies. On the other hand, perils like mudslides, flood damage, and termite damage are generally excluded, though coverage can sometimes be purchased separately. Question 29. In Alaska, what is the standard amount of liability coverage included in most homeowners insurance policies? A. $100,000. B. $250,000. C. $500,000. D. $1 million. Answer A. $100,000. Explanation. The standard liability coverage included in most homeowners insurance policies in Alaska is typically set at $100,000. Although higher, limits can be selected based on the homeowner's needs. Liability coverage protects the homeowner in case they are legally responsible for injuries or damage to others. Question 30. Which of the following is true regarding mold damage under a standard homeowners policy in Alaska? A. Mold damage is fully covered without limitations. B. Mold damage is always excluded. C. Mold damage may be covered if it resulted from a covered peril, but with limitations. D. Mold damage is covered as long as it is discovered within the first year of the policy. Answer C. Mold damage may be covered if it resulted from a covered peril, but with limitations. Explanation. Mold damage is typically excluded from standard homeowners insurance policies, but it may be covered if the mold is the result of a covered peril, such as a burst pipe. However, there are often limitations on mold coverage, including specific caps on the amount the insurer will pay.